think you need thousands of dollars to start trading options, but I'm here to show you exactly how you can trade with just $500. I will walk you step by step through the strategies, the risk, the rewards, and at the end, I will give you my free options trader toolbox to make sure you start with the right tools. Without any further ado, let us dive in. Hey everyone, I'm Telex from Successful Tradings. I've been helping traders build their accounts one smart or successful trade, no pun intended, trade at a time. In this video, you will learn how to safely trade options with $500, the 3 strategies that actually work for small accounts, and a simple way to manage your risk so you don't blow up your portfolio. Listen, the reality of trading a $500 account is this much. You are not chasing the so-called get rich traders out there with the Lambos. You are building consistency. Your key is to control your risk, because one bad trade can wipe out your accounts. So here, for instance, the suggestion is to risk no more than 5% per trade. And we have built a calculator for you to make it easy. So that calculator, actually, you can demo that. You can download that rather in the description, and then also on the website, where the calculator will let you plug your risk into the risk calculator from the toolbox. With $500, let's say, for instance, 2% risk is $10 per trade. Now you could wonder, what type of trade I can make with $10? Well, we have plenty of trade that we can make for $10. But here I'm going to show you actually 3 strategies, step by step, where you will be able to apply this very principle and this rule of thumb to keep you alive long enough to learn option trading. So the first strategy we are going to dive into, it's called a Debit spread. What is a Debit spread? Here, it's a defined risk strategy. That's what makes it attractive, right? So a Debit spread is where you buy one option. Let's say you're going to buy a call and sell another call at a higher strike. So this keeps your cost low, the risk is fixed, and the potential reward is defined. An example, for instance, could be, okay, I want to consider AMD, so I'm going to buy, let's say, a AMD trading at 165 today. So 170 call, yeah, on AMD, and then I'm selling a higher strike, so that would be 179 or 180. So the difference between the two is my cost. So let's say in this case, my cost is $20. Well, that will be all I'm risking on that trade. But my reward is defined ahead of time, because I know exactly the payout on that. So I will make a detailed video, going actually inside of Webull to show you how to go through that. I think we have one, but we will make a newer one to make it plain and simple. So that's the first strategy here that you can use to trade a $500 small account to start as a beginner without taking too much risks. Again, the goal is for you to remain live enough to be able to take advantage of future opportunity. The second strategy that we are going to get to, this is one really I've used it. Even you can use it that you're a beginner trader or you're an advanced trader, and it's really attractive to me. Why? Because I get money firsthand. So it's called a covered call strategy, right? So what's need to happen here? Yeah, so if you have $500 as a beginner trader, you can find a cheap stock under $5 that you can buy 100 shares of. So 100 shares multiplied by $5, that would be 500 shares, and then sell a covered call against it. This will bring in income, because when you sell that call, which is covered by your 100 shares, guess what? They will give you that money into your account. So let's say there is a stock that I like doing that. I've done that a lot this year in 2025. We call it the darling of the stock in my Discord. It's SOUN, SOUN, right? So that stock right now is trading at 13 $13.02 as of a few minutes ago. But this stock used to be like $7, $8 and so forth. So you can really, I mean, depending on your account size, you can get really, if you have $1,000, for instance, you could really put that at in full execution. So with that strategy, you buy 100 shares, but in this case, let's take 100 in our scenario of $500 in your account. So you buy 100 shares of a $4 stock. So that would be an investment of $400, right? So, and then you sell, for instance, the 4.5 call, and then you collect that premium. So what could happen, that would be like, let's say 5% of your account back in one move, right? So what will happen, either that stock goes above, way past the strike price that's you sold, and in that case you gain, you keep the premium. At the same time, you get to get the difference between your price where you bought it, right? Your buying price of which was for you $4, and let's say it goes to 4.5, so you get that $50 in there plus whatever you got out of the premium. So, and then you can repeat this all over. The only thing on here, right, is that with this technique, this will tie up a lot of the money on your accounts, and you will always have a cap on the upside, because that cap will be, let's say the stock that you bought it at $4. Let's say if it goes to $7, well, my friend, you can get only all the way to your strike price that you sold. That has happened to me. That's what happened to me. I can give you 2 examples. And every single time I was fearing that you make good money. NVDL is one that I used to love doing this on. And then when, let's say at April timeframe, right, when NVDL was down a lot. So, and then all of a sudden, it just went parabolic or whatever they call it. So on that day, I was trading the 61. I sold the 61 call contract, and then it closed at 70 on that week. Yeah, the following week, well, I bought less number of shares and then keep repeating it. It's not a bad thing. It's just that sometimes as a trader, you will feel bad, like, oh my God, I left all of this money on the table. But that's another story for another time. So this is called a covered call, which you can definitely do. And then a side question on here, I'm going to put a video here at this very point, right? So where to find $4 stock? We have a great tool for that. We have a screener, which is FinViz. So if you don't know, please definitely get onto that. But we have demoed it on this channel, and we will continue doing that. The third strategy, which you can use with a $500 account as an option trader, a novice option trader, is called a cash secure put. So you want to own the stock at a discount. Yeah, well, guess what? You can sell a put, hold enough cash to buy 100 shares of it. That's, again, this one we can see right away what's going on here, right? We will need that cash to be able to do. So if you get assigned, you get the stock. If not, you will keep the premium. So example, for instance, let's say I'm selling 100. I sell 100 puts and I collect maybe $15. Well, I need to keep 100 times 10, because that's my strike, which is $1,000 in reserve in my account, because that's what's securing that position. So here, this strategy is more capital intensive, but a great way to build position while you're earning income. So which strategy should you really use, right? So as a beginner trader here with a $500 account, so let's compare the pros and the cons on here. So for really a beginner trader with 500 accounts, our recommendation will be to start with the debit spread, because this debit spread on here, your capital required from the get-go is not that much really. You can set up several trades using Webull tool with a very small amounts of money. So for the account, so the debit spread will be what you want to do from the get. So if you can stretch, let's say 300 to 500 in the stock, then you can do a cover call, and there are plenty of stock. Trust me, those penny stocks, we can find plenty of them. We'll show you. We'll post a video definitely how to use FinViz to scan for those. And if you are getting closer to 1,000, yes, then you can do a cash secure put to give you both income and stock ownership Which now, remember, once you become an owner of a stock, then my friend, you can go back and start doing, for instance, cover calls. So these three strategies actually, as you evolve as a trader, you can use them at your own guidance. So we have shown you three strategy on here, and then to make it really, really easy for the beginner trader with trading small accounts, I built a free option traders toolbox. So inside of this description, you can find it, you can get it. There is a risk calculator on there that I showed. There are the three strategy cheat sheet that's available to you. I will even have another type of quick guide, so how to order at the limits or the markets. We included a trading journal in there, and then we even have a glossary of key terms in trading. So grab it at successfultrading.com/toolbox. There is a nice page on there where you don't have to do anything, give your email or anything. You just grab that. That's for you, or that's your reward for following us on here. So in conclusion, we talked about how to trade with a $500 account. It's absolutely possible. So if you focus on the risk management and the right strategy, so you start small, you stay disciplined by not risking more than 5% on any given trade, and you scale up as you grow. So don't forget to like, subscribe, and drop a comment if you're starting your option journey with a small account. I will love to hear from you. Thank you for watching. Until then, have a great time. Bye-bye.